Oil just crossed $100 a barrel. Your grocery bill is about to go up. Your next flight? More expensive. Your savings? Under pressure. And most people have no idea why. It all traces back to one war, the Iran-US-Israel conflict, that kicked off just 2 weeks ago. And whether you care about geopolitics or not, this war is already messing with your money. Stick with me for the next 9 minutes, and I'll show you exactly how and what you can actually do about it. Hey, welcome back to Quick Quest, where we break down big global events and tell you what they actually mean for your money and your life. Today we're diving into the Iran-US-Israel war. Not the politics, you can get that anywhere. We're talking about the economic ripple effects, the stuff that hits your wallet. Let's get into it. Okay, quick context, because you need this to understand. The money side. 2 weeks ago, a new conflict broke out between Iran, the US, and Israel. Over 2,000 people have already died. Iran hit US military bases in Bahrain. Israel carried out strikes in Beirut. President Trump threatened Iran's new supreme leader directly. Iran responded by threatening to do something that should terrify every economy on the planet: close the Strait of Hormuz. Now, if you've never heard of the Strait of Hormuz, it's a narrow waterway, barely 33 kilometers wide at its narrowest point, and 1/5 of the world's entire oil supply passes through it every single day. 1/5. If that closes, we're not talking about inconvenience. We're talking about a global energy shock. That's the setup. Now let's talk about what it means for you. Let's start with the most immediate impact: oil. Oil prices have already crossed $100 per barrel. That might sound like something only traders care about. It's not. Here's how it hits you directly. Number 1, fuel. If you drive, you're already seeing it at the pump. Petrol prices typically follow oil prices within days. Number 2, food. Every piece of food you buy was transported. Trucks run on diesel. Ships run on fuel. When shipping costs rise, food prices rise. It's that simple. Number 3, everything else. Electronics, clothes, appliances. Global supply chains run on oil. A sustained spike doesn't just raise prices temporarily. It restructures what things cost long-term. And here's the thing, we're only 2 weeks in. If the conflict escalates, $100 per barrel could look cheap in hindsight. The smart move? Start tracking your essential expenses now. Know where your budget is flexible and where it isn't. Now zoom out a little, because this isn't just about your grocery bill. It's about the entire economy. Economists are already using the I word: inflation. We've barely recovered from the last inflation wave, the one post-COVID, and now there's a new trigger on the table. Here's the chain reaction: oil goes up, shipping goes up, production costs go up, companies raise prices, central banks raise interest rates to fight inflation, borrowing gets more expensive, people spend less, the economy slows down. That cycle affects you whether you're a business owner, an employee, an investor, or just someone trying to save money. Europe is especially exposed here. They import heavily from the Middle East and have been trying to stabilize energy costs since the Russia-Ukraine war. Another energy shock could push them back into recession. And the US? Already nervously watching oil. Any president facing an election year hates rising fuel prices because voters feel it immediately. Bottom line, if you have investments, watch inflation expectations closely. If you have debt, variable rate loans could get more expensive. And if you're saving, purchasing power is quietly shrinking. Let's talk about travel and safety, because this war isn't just being fought in the desert. Airlines are already rerouting flights around the Gulf. That adds hours and fuel costs, which get passed on to you in ticket prices. If you're planning to travel to or through that region, expect delays, cancellations, or significantly higher fares. But here's the part most people miss: the cyber dimension. Modern wars aren't just missiles. Iran in particular has a sophisticated cyber warfare program. Past conflicts have seen attacks on banking systems, power grids, and critical infrastructure. That's not a movie plot, it's documented. What does that mean for you practically? More phishing scams, using war headlines as bait, potential disruptions to financial services or apps, and an increase in misinformation. Campaigns designed to cause panic or manipulate markets. Stay skeptical of anything sensational in your feed right now. Verify before you share. That's not paranoia, that's just being financially and digitally smart in wartime. Now let's zoom all the way out, the big geopolitical picture. Countries are being forced to pick sides. The US is reinforcing military presence in the Gulf. Iran is rallying regional allies. That includes groups in Lebanon, Iraq, and Yemen. Israel is escalating with unprecedented intensity. What this means economically: trade deals get delayed. International investment slows down. The UN is distracted. Climate talks, economic summits, and development agreements go on the back burner. For emerging markets, countries that depend on stable global trade, this is especially dangerous. Currency pressure, capital flight, and reduced foreign investment follow every major conflict. And elections matter here too. Leaders in the US, Europe, and the Gulf will all be making decisions based on domestic political pressure, not just strategic logic. That unpredictability is itself an economic risk. Markets hate uncertainty, and right now there's a lot of it. Before we talk about what comes next, I want to take 30 seconds on something we can't reduce to charts. Over 2,000 people have died in 14 days. Families displaced. Children in war zones. Communities destroyed overnight. I cover economics and finance, but behind every data point is a real person. The refugee becomes a statistic in a migration report. The destroyed city becomes a line item in reconstruction costs. I think it's important to hold both things at once: the financial reality and the human cost. Because ultimately, that's why economic stability matters. Real people's lives depend on it. So where does this go from here? There are 3 realistic scenarios right now. Scenario 1, de-escalation. Diplomatic channels open. A ceasefire is brokered. Oil pulls back below $90. Markets stabilize. Unlikely in the next few weeks, but not impossible. Scenario 2, sustained conflict. The war continues. At its current intensity, oil stays high. Inflation. Pressure builds. The global economy absorbs the shock. Slowly, painfully, but without collapse. Scenario 3, escalation. Iran closes the Strait of Hormuz. A wider coalition of countries gets pulled in. Oil spikes past $130, $150. We're talking about a global recession trigger. Right now, scenario 2 looks most likely. But the gap between 2 and 3 isn't as wide as we'd like. The key signal to watch: the Strait of Hormuz. If shipping starts getting disrupted there, that's your early warning system. Watch the oil futures market. Watch what the Fed says. That's your economic barometer. So let's bring it home. The Iran-US-Israel war isn't just a news story. It's an oil shock, an inflation risk, a travel disruption, and a signal that global economic stability is fragile right now. What you can do: track your fuel and food spending, it's going to shift. Watch oil futures and inflation data, they're your early warnings. Be skeptical online, misinformation spikes during conflict. Don't panic, but don't be passive either. If this video gave you any clarity on how global events connect to your money, smash that like button. It helps more people find this channel. And if you're not subscribed yet, hit that subscribe button. Right now, we break down exactly these kinds of big, confusing world events and tell you what they actually mean for your finances. Every week. I'll see you in the next one.